We've got P Singh, Chairman Managing Director, now joining us. Thanks so much for taking time out. Let's just talk about your latest QIP plans. Can you highlight where the buying interest is coming from and any sort of conversations that you are having with your investors?
So our QIP has been launched and successfully completed. We've raised close to about 250 crores in this QIP. We've got institutional investors who have participated in the likes of HSBC Prudential Life, Bajaj Allianz, and we've got Society General. So we've got the floor price at about 242 rupees, which was the floor price, and a discount of about 5%. So the shares were issued at about 230 rupees. And this is growth capital for us. And having successfully launched this QIP, I think we're looking at growth for us. Our capital adequacy remains very healthy. It was about 25 to 26%, before the issue, but gets bolstered down for us. And this bodes very well in terms of positivity for our company.
Yeah, that. But while the RBI's risk weight measure, Mr. Singh, may not impact your company's Tier 1 capital, could there be a second-order effect on the cost of borrowings? What's the trajectory that you're expecting?
I don't think so, since microfinance has been exempted from the risk weight categories by the RBI. For us, I think in terms of cost of whatever rate hikes had been there have already been done. We are now looking at the environment where I think the rate hikes are not going to happen. For us, there is possibility. There is no possibility technically of any cost of funds being increased in terms of our rates. And we are looking at, in fact, post a couple of quarters, if this remains stable, in fact, I think the cost of funds will probably go down from there. And the same will be probably passed on to our borrowers.
Interesting. Tell us about the disbursements momentum as well, the customer additions. Are you on track to achieve the 25% plus growth?
Yeah, absolutely. I think, the guidance which you've given for a 25% plus growth, that remains in terms of our disbursement, looking at the past 2 quarters, hopefully. And we are very sure that we'll be able to have a 25% plus growth. The momentum is pretty strong in terms of the demand, which is coming in at the back of, good monsoons, as well as the productivity in agriculture and allied activities holding ground. So I think that all bodes well for the guidance which we've given to probably, even surpass that, to a certain extent.
Okay, fair enough. And you're also diversifying into the non-MFI segments in the long term as the contribution from that increases. Would the yields then come under pressure?
No, I don't think so. No, those are 2 separate businesses which we are looking at, both housing as well as MSME lending. And both are more focused towards the rural landscape. So we feel that, I think, over there, the pressure is not there on the yields. The pressure on the microfinance is also not on the yields, As I said, earlier, if any cost of funds goes down, that will be passed on. So probably the yield will remain in the same levels as such, So no pressure on the yields as such.
And given that the RBI as well has sounded caution on unsecured loans in the system, microfinance, although income-generating loans are largely unsecured in nature, are you seeing any downside risk on your asset quality in the near term, or any credit cost guidance that you can share with us for FY24?
No, I don't think so. That is probably the case, because this is more productive loans which we give. And as you said, these are income-generating loans. Definitely, there's a difference between a consumption loan and a productive loan and a income-generating loan. So I think, the downside risk is not there because this is required for genuine business purposes as such and for economic activity. We've given our guidance for ROA, which is 3.5% plus. We've already, surpassed that, and we still remain very hopeful that we'll be at stable ROAs in terms of our long-term view, which is there.
Sure. Bigger peers, Mr. Singh, in the NBFC space, like Bajaj Finance, have started pilot operations in the MFI space. How is it that you view this competition? And could your yields growth be challenged at any point?
I really don't think so. It's a very wide market. And if you really look at the demand, I think, if we've done possible surveys by the SROs as well as various other agencies as such, The demand technically talks about, we are close to about 4 lakh crore in terms of the industry size. What, the demand probably foresees is for the next 5 years, this will probably grow up to about 15 to 17 lakh crores. So looking at the demand and the capability of growth, which is probably there, I think, all players are welcome. I think, it actually bodes well for the sector, when, I think, players like Bajaj Finance enter the arena as such.
Appreciate your time. Thanks so much for flagging off all of those details. That's the management of Satin Credit, saying that a 25% growth guidance remains. Momentum is strong on the back of agri activity as well that is picking up.